Hello viewers, welcome to my channel. I'm Hasham Khan. Already 3 problems we have completed on computation of income from other sources. So in the last video, 3 problems I have done on computation of income from other sources. Before that, already introduction theory I have explained completely regarding the provisions of income from other sources. So hope my regular viewers have already watched those 2 videos, introduction part and first part problems. If you have not watched, I suggest you to go to the playlist of my channel, select the subject income tax 1 for the assessment year 2021. Watch the earlier videos, then only you can be able to understand. If you join in between, you may not be able to understand. So the complete problems are based on the provisions, on the theory. So don't ignore the theory. So if you are new to my channel, I suggest you to visit the playlist of my channel. I have uploaded so many videos on different topics. Select the subject, select the topic, watch the video, enhance your knowledge. So before starting the next problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So now I am going to start the next problem, that is problem number 5. Problem number 4. Calculate interest from the following securities. So only we have to find out income from interest on securities. So 15% tax-free commercial security 90,000. When it is given tax-free commercial security, 2 steps. First we calculate NI, then we calculate GI. Already in the previous problem also we have done tax-free commercial security, 2 steps. Net interest face value into rate by 100. Gross interest, net interest into 100 by 90. That provision we apply. Then second one, 10% tax-free Reliance debentures, rupees 40,000 listed. Whether the securities are listed or unlisted doesn't make any difference. For both, the method of computation is same. So here also tax-free Reliance debentures. So tax-free commercial security. Again 2 steps we apply. 8% national savings certificate. This is fully exempted from tax security. So the interest on national savings certificate is not at all taxable, fully exempted. Collection charges are 1200. That's all. It's very easy problem. First of all, computation of income from interest on security for the assessment year. 15% tax-free commercial security unlisted. Whether listed or unlisted doesn't matter, ignore. Now first of all, it's a tax-free commercial security. So 2 steps. First step, NI. Net interest is equal to face value into rate by 100. What is the face value here? 90,000. What is the rate? 15. So 90,000 into 15 by 100. 13,500 is the net interest. Now we have to gross it up. So gross interest is equal to net interest into 100 by 90. This is the provision for the current assessment year 2021. So 100 by 90. 13,500 into 100 by 90, 15,000 over. Second, 10% tax-free Reliance debentures. Reliance again will come to commercial security. So just like the previous case, here also tax-free commercial security, but it is listed. Doesn't make any difference. Same, NI. Net interest is equal to face value into rate by 100. 40,000 into 10 by 100. 4,000 is the NI. Now GI, gross interest is equal to NI into 100 by 90. 4,000 into 100 by 90. That you will get 4,444 rupees. Third one, 8% national savings certificate, 75,000, fully exempted from tax security. Dash. Take the gross interest, 19,444. From that, deductions under section 57. Only one deduction in this problem, that is collection charges. Deduct collection charges, income from interest on securities. That's all. So this is the end of problem number 4. Now, 5th problem. Mr. Venkat's investments for the previous year 2019-20 are as under. Our current previous year is 1920 and assessment year is 2021, right? What are the investments given? 25,000, 12% municipal bonds. If nothing is given, we have to assume it as less tax. 3 types of security: exempted, tax-free and less tax. Exempted security, if it is given, simply we have to ignore. The list of exempted security already I have explained in the previous theory video. So municipal bonds, nothing is given, so it's a less tax. For less tax security, whether it is government or commercial, only one step. Only one step. GI is equal to face value into rate by 100. So here municipal bonds, GI into face value into rate by 100. Then 20,000, 10% debentures of sugar company listed. Nothing is given. Again, we assume it is less tax. Specifically, if tax free is given, then only we have to treat tax free. Otherwise, it will be a less tax. Only one step. GI is equal to face value into rate by 100. 30,000, 20% less tax debentures of Sony Company Limited. Directly it is given less tax. So only one step, GI is equal to face value into rate by 100. Then 15,000, 10% treasury saving deposit certificate. This is a fully exempted from tax security. Treasury saving deposit certificate is fully exempted from tax security. Then 50,000, 20% AP government loan, Andhra Pradesh government loan. It is less tax. Nothing is given, so it is a less tax. One step. GI is equal to face value into rate by 100. 12,000, 16% convertible debentures of Reliance Company Limited. It's less tax. Nothing is given, so it's a less tax security. Then 20,000, 15% National Savings Certificate. So National Savings Certificate is fully exempted from tax security. So we came across two exempted securities in this problem. What are the two? First, Treasury Saving Deposit Certificate. Second one, National Savings Certificate. These are completely exempted from tax security. Last one, 30,000, 20% debentures of Tata Motors Limited, not listed. Nothing is given, so we assume it as less tax. Only one step. Only one step. GI is equal to face value into rate by 100. All the security we have taken. Now adjustment. On 1st October 2019, Reliance Company Limited debentures were converted into shares. So earlier we have seen 12,000, 16% convertible debentures of Reliance Company Limited. This security debentures are converted into shares during the year. When it was converted? 1st October 2019. So up to 1st October 2019, the securities are debentures. After 1st October 2019, it has become shares. The company has converted the debentures into shares. On shares, the holder will get the dividend. Shares के ऊपर जो आएगा वो dividend, and that is not taxable, that is exempted. Dividend received from Indian companies are not taxable, exempted from tax. So we have to calculate the interest only for half year, because actually interest are paid twice in a year. Semi-annual interest will be paid every 6 months. So due dates are fixed. The due dates are fixed. On the due dates only 6 months interest will be paid. So here 1st October 2019 means before 1st October 2019 one interest has been paid. One due date falls. One due date of interest will fall before 1st October 2019. So we have to calculate the interest on Reliance Company debentures only for 6 months. That point you have to remember. And on 1st December 2019, he bought 50,000, 20% Bihar government tax-free security for rupees 45,000. So during the current year, one more security SSC has purchased. When he has purchased? 1st October 2019. He has purchased. Face value of the security 50,000. It is tax-free government security. He has purchased it for 45,000. We are not concerned with purchase price. We are concerned with the face value, because interest will be calculated on the face value. The face value 50,000. Now again, these debentures, this security are purchased during the year, not from the beginning, but during the year. So we take interest only for 6 months, because only one due date will fall during the period of holding. During the period of holding, one due date will fall. So we'll calculate the interest for 6 months on this new security purchased. For this purpose, he took a loan of 40,000 from a bank at 12%. So for purchasing this Bihar government security, the SSC has taken a loan. Loan of rupees 40,000 he has taken. So Income Tax Act says interest paid on loan taken to purchase the security is allowed as deduction under section 57. So we calculate the interest on this loan, 40,000 loan into 12% rate into how many months? He has taken the loan on 1st December. So December, January, February, March. 4-month interest we calculate. So while paying the interest to bank, we should take 4-month interest. But for interest on security, we take the interest on security for 6 months. Remember this point. Normally students will commit the mistake. They will calculate the interest received also for 4 months. No. Interest on security earned will be for 6 months. Whereas interest paid to bank on loan taken is only for 4 months. Then he paid collection charges 2,500. This will be allowed. Only 2 deductions are allowed under section 57. Collection charges and interest paid on loan taken to purchase the security. Calculate interest on security for the assessment year 2021. So we have to calculate income from interest on security for the assessment year 2021. Now see, computation of income from security of Mr. Venkat for the assessment year. First, rupees 25,000, 12% municipal bonds. Simply it has given municipal bonds. It has not given tax free or less tax, nothing. So whenever the problem is silent, we have to assume it is a less tax security. And for less tax security, whether it is government or commercial, 1 step. Less tax. If it is less tax for both government and commercial security, only 1 step. GI is equal to face value into rate by 100. So GI is equal to face value into rate by 100. 25,000 into 12 by 100. It comes to 3,000. First security over. Now second security. 20,000, 10% debentures of Sugar Company Limited listed. Forget about listed or unlisted. Provisions are same. So debentures of Sugar Company. Nothing is given. Again we assume it has less tax. When it is less tax, only 1 step. GI is equal to face value into rate by 100. 20,000 into 10 by 100, 2,000. Finished. 2 security over. Third security. Rupees 30,000, 20% less tax debenture of Sony Company Limited. Specifically given less tax. No need to make the assumption. No need to assume. It is given less tax. 1 step. GI is equal to face value into rate by 100. 30,000 into 20 by 100. 6,000. Over. Now fourth end. Rupees 15,000, 10% treasury saving deposit certificate. Just now I told you treasury saving deposit certificate is fully exempted from tax security. The interest on this security is not taxable. Exempted. Put a dash. Then 50,000, 20% AP government loan. Only given 20% AP government loan, nothing is given. So it is a less tax. When it is less tax, only 1 step. GI is equal to face value into rate by 100. So 50,000 into 20 by 100, 10,000 over. Next one, 12,000, 16% convertible debentures of Reliance Company Limited. Converted into shares on 1st October 2019. At the beginning of the year, the SSC is having 12,000, 16% convertible debentures of Reliance Company. First of all, it's a less tax security. It is a less tax security. The SSC is having from the beginning. But during the year, on 1st October 2019, these debentures are converted into shares by the company. Reliance Company has converted these debentures into shares. On shares, the SSC will get dividend. And dividend should not be considered. Only interest we have to consider. So half year interest we have to calculate. We have to calculate interest only for half year. So 12,000 into 16 by 100 into 6 by 12. Because During the year, it has been converted into shares. Only one due date will fall during the holding period. During the holding period of debentures, only one due date will fall. So 6 by 12, 960. So F point completed. Now G. Rupees 20,000, 15% National Savings Certificate. Already we have discussed in the introduction video. National Savings Certificate is fully exempted from tax security. Tax is not, interest is not taxable. Put a dash. 30,000, 20% debentures of Tata Motors Limited not listed. Forget about not listed. It is only given debentures of Tata Motors. Again, it is a less tax. Nothing is given less tax. So only one step. GI is equal to face value into rate by 100. 30,000 into 20 by 100, 6,000. Next one. Rupees 50,000, 20% Bihar government tax-free security. It is a tax-free government security. When it is tax-free government security, one step. GI is equal to face value into rate by 100. Tax-free government security, only one step. But these securities are purchased on 1st December 2019. That means these securities are not there from beginning of the year. These securities are purchased during the year. So only one due date will fall during the holding of this security. During the holding period of this security from 1st December to 31st March, we assume one due date will fall. One due date. So we'll calculate the interest for 6 months. So GI is equal to 50,000 into 20 by 100 into 6 by 12. Half year. We calculate the interest for half year because during the year we have purchased. So 5,000 rupees the interest over. We have calculated the interest on all the securities. So we got gross interest. Gross interest 32,960. From gross interest, deductions are allowed under section 57. First, collection charges. Collection charges are directly given in the problem, 2,500. Second, interest paid on loan taken to purchase the Bihar government security. This Bihar government security were purchased during the year. To purchase this security, the SSC has taken a loan from bank. How much loan he has taken? 40,000 given in the problem. 40,000 loan he has taken. What is the rate of interest charged by the banker? 12% given in the problem. So 40,000 into 12%, you will get the interest for 1 year. But we have to calculate the interest for the period of loan taken. Period of loan taken. When the loan is taken, 1st December. 1st December. So we calculate December, January, February, March. 4 months. So we calculate the interest for 4 months. 4 by 12. So 40,000, 12%, 4 by 12, you will get 1,600. So 2,500 collection charges. 1,600 rupees is the interest on loan taken. So total deduction 4,100. Now deduct 32,960 minus 4,100. You will get 28,860 income from interest on securities. So we have completed 5 problems on income from other sources. So if you watch with full concentration, then definitely you can get a good comment. But my suggestion is, at the time of watching the video, please keep a notebook beside you. Take a calculator, notebook, and as I'm explaining the points, you jot down, you write down those points. Then only you can be able to get the full command. Otherwise, simply if you watch, if you listen this video, it will be only 50% beneficial, not 100%. You can get 100% command only by writing the notes while watching the video. That is my suggestion for your benefit. So if you are satisfied with my lecture, give a like to the video, share it in your group, in your friend circle, and give your comments. I'm waiting for your comments. How you rate my lectures, how you treat my lecture, whether it is increasing your knowledge or not. And lastly, subscribe my channel if you have not yet subscribed. We'll continue the problems in the next video.